All right, Matt Davio back with Mike Wilkins. Some of you may know Mike on the Twitter sphere as Ilk. That's I-L-K and cookies. Mike, thanks for coming on with us today. I love your Twitter handle. I'm sure Milk and Cookies was taken, but I'm sure it's a play on your name also, Mike Wilkins. I would imagine.
That's exactly what it is. It's my nickname's been Ilk for years and years and years now. And it's funny when I chose that Twitter handle back in the summer of 2008, I honestly, in what could be considered one of the worst trades of my life, I said, I don't think Twitter's really going to go anywhere. Why don't I give myself a nice goofy name? Nobody's going to care. And here I am, 2 years and 30,000 plus tweets later, and I'm like, boy, was I wrong? And I guess I'm glad I was. So
you got onto the Twitter game, you said early '08, so about a year after it started?
Yeah, it was around July of '08 or so, and it was there was an article I read in Wired magazine probably about a year before that was basically about Evan Williams and him founding Twitter, and I was like, it's kind of an interesting idea. I'm somebody I consider myself a pretty social person. I like to know what other people are up to. But I just thought that people wouldn't be willing to share the minutiae of their lives, or nobody would be interested in the details of their lives. So I just never thought that there'd be enough of a sphere that would build around it where people would really develop an interest in that question, which is, what are you doing?
And I actually jumped on it right away in March of '07, and I don't think I touched it. I probably took 6 months off, Mike, and then I probably got back on in the fall of '07. Okay. And then, I started, but I was more of a lurker. I was reading other people. And that's where I found it intriguing to me, is it wasn't me talking about my peanut butter sandwich I had for lunch, but it was me actually as a trader picking up snippets of information that I could make money off of, and that being just somebody wrote about, hey, the sales are looking strong here in my area of Chicago, Nike stores, in fact, whatever, something like that you can glean information off of, and that's really where it started clicking for me in my business.
Right.
So that's interesting, because I think that is, Mike Suster wrote an article today. I don't know if you read him. He's got a great blog. Yeah. He's a VC. He's got a blog called Both Sides of the Table. And he was a VC, and he had a successful company, and now he is a VC, rather. So he's kind of making that transition from entrepreneur to investing now into entrepreneurs. And one of the things that he wrote about is on Twitter is it really has become, it's kind of, and this is a reason why Delicious now has expired. Evernote is big, but Twitter is big because it's now become a research mechanism for a lot of people to really find out what's going on in their industries, in their specialties, whatever it may be, and it's consumer research and business.
Absolutely.
Research. Pretty powerful.
Yeah, I was a Google Reader loyalist for a long time. I was I had all the RSS stuff loaded in my Google Reader. Now I just wake up in the morning. I have a fair amount of people who I follow, and I follow closely, but I think there's 4 or 5 people I follow who really always hit a home run in terms of the content they link to, and I always make sure that I star those, and that kind of becomes my own personal Delicious for the day. Yeah. And I'll knock out the reading on the train or whatever, but I don't feel like there's really the need for the aggregators.
It's tough, like you said, I'm with you. I still use, I still have my Google Reader and my feed there, but I'd probably go to it very rarely, and I've and if I hadn't set it up where I have a very, logarithmic filing system, it wouldn't even work at all. It'd be too sporadic. Most people aren't going to spend the time to even do that in the first place. So, Mike, let's talk a little bit about you and your relation. I'm in the trading business. You're in the trading business, but you're kind of on both sides. You're a trader, and you're involved from the floor operations you have been in the past, to taking it upstairs. And the way I trade, I've always traded from the screen, and I've never traded from the floor. So give us a little background on Mike Wilkins, and you do live in Chicago, as you said. You've got a young family, and give us a little bit of background on your life in the trading side of business.
Sure, been in the business for 15 years. My first job was I was home from college for the summer and got a job as a runner on the floor of the Board of Trade, paying $5 an hour in the grain room, working for Smith Barney. And it was, I got home from school and my dad's like, all right, you got to get a job. He's like, why don't you apply at Jewel, which is our local grocery store, or Menards, which was it's like the Midwestern Home Depot. And I'm like, I did that in high school. I don't want to do that again. I'm going to try to find something fun. So I literally one day jumped on the train downtown and was walking down Jackson Boulevard, just kind of with a stack of resumes in my hand, just looking for different office buildings and seeing what would go, if I could get a job as an office boy or something for the summer, maybe at a law firm. Or at the time I was still, studying pre-law. I had these grand ambitions of being a star litigator. But I went by the Board of Trade, and like so many other people, I was captivated by all the people standing outside in the funny coats. And I'm like, I want to find out what this is all about.
Okay.
So this is obviously in the days before there was a lot of security. I just blundered right into the building and started sticking resumes under every door I saw. Ended up, somehow my resume got into the hands of the floor manager from Smith Barney. They called me in for an interview. They basically asked if I could handle getting yelled at and if I could be at work by 8:30 every day. So I'm like, sure. And they offered me the job. So I worked as a runner, got yelled at a lot, had a lot of things thrown at me.
So tell us what a runner, for the uninitiated, I know what a runner is, but tell us what a runner does.
Yeah. What a runner basically did is when you see videos of the trading floors and stuff, you see a lot of stuff that takes place by a hand signal, but primarily in the less busy pits, than the 4 or 5 different exchanges you had in the U.S., you had runners who would take literally paper orders, time-stamped from a phone clerk, run them into the pit. Broker would take the order, either execute it immediately or put it in their deck, and then fill the order accordingly. When the order was filled, the runner would go back out, grab the order from the broker or from the giant stack at the edge of the pit and take it back to the desk.
Right.
Then the information would get communicated back via the phone clerk or the wire system or whatever to the client. But it was, working for Smith Barney was, I was working for a big shop. I was handling, it was an institutional grain desk, handling a lot of both speculative and hedger positions. So it was really and the sales guys, they were really friendly. They taught me a lot about the dynamics of how the market moved. And
so, I want to stop you right there because you just threw out a number of terms that I want people to understand. Speculative versus
commercial. What's the term?
Commercial. Explain to people what that means to you.
Speculator is just somebody who's in the market solely to make money. They see a trend. They don't care if it's soybeans, treasury bonds, equity futures, a single stock. And they're just looking to make a buck. And in the commodities world, in the futures world, there's a lot of fascinating stories of people who've made a buck and lost a buck over and over and over. And it's really what makes the derivative side of the business so unique is the spectacular home runs, the spectacular strikeouts that so many people have had.
Right.
Whereas on the other hand, you have the commercials, the hedgers of the world, who have for whatever reason, have commodity risk. Let's say I'm a soybean producer in Brazil.
In the grain world, obviously Archer Daniels is a big hedger in that type of business.
Exactly.
As you said,
Louis Dreyfus is a big one.
Yeah.
Trying to think of some other big names out there. The biggest one is ADM. Archer Daniels made them, but then you have Louis Dreyfus.
So these guys, again, Mike, they actually grow and own products. So they are trying to basically sell it at a future price, whether higher or lower, or buy it at a future price. And they're, Starbucks has people that are in there, right now, probably very active in the coffee markets as coffee's seeing all-time highs for the year. So, these things, but this is important for people to understand is that these are the players, if you will, in the market. And the speculators still, Mike, are probably the biggest chunk of people out there participating in the markets. It doesn't matter what you trade.
Absolutely. And it's funny, I mentioned the speculators in the business to make a buck. The commercial or the hedger, on the other hand, is in business just not to lose a buck, basically. Right. They want to mitigate whatever risk they have in the cash commodity. Yeah. They want to offset that in the futures markets, and that's the beauty of the futures markets. It provides a liquid, centralized place to do that with guaranteed with a clearinghouse standing behind you to guarantee that your trade will be cleared and your position will be held and marked to market accordingly without having to worry about a default from a counterparty.
Fascinating relationship when you think about it. One guy's trying to make money, the other guy's basically playing defense all the time, and
exactly.
And both can end up doing the opposite. So it's a fascinating relationship in that regard.
It really is.
So you also mentioned, I want to throw this out, and then I'll let you continue. Sales trader. So you've got these guys down there again, guys that are making decisions, right? Those are the speculators and the hedgers. And then you have the sales traders. Tell us at Smith Barney, what did these guys do for Smith Barney?
What these guys did was, this was the time when it was a very much a closed, restricted area in terms of who could actually solicit business on the exchange floor. You had to be an exchange member. So what they'd do is all their sales traders would go through a training program via Smith Barney, or be brought, or the more senior or older guys would have brought a book of business over from somewhere else where they felt like the commissions would be enough to be beneficial to the sales exec and obviously to Smith Barney's operation as a whole. But they'd sort of take the cream of the crop of these sales traders who were providing ideas, market commentary, and execution services to their clients, be it a speculator or a hedger. And the best of those guys were actually given exchange memberships and the chance to take their business to the floor.
Okay.
Where they'd have the quickest access to the pits and the shortest turnaround for their orders. So they were probably...
Can those sales traders that become exchange members, because I don't know the answer to this, are they allowed to actually take positions that they're also selling to clients?
They could not. There was very strict, obviously, exchange and firm policies about that. That may have changed over time, but I know at the time it was really, unless you did have some guys who were sort of hybrid brokers. They were sales traders, but they would also they take advantage of their exchange membership and also go into the pit. And I worked with one for a while who he'd actually go in the pit and fill an order. He'd obviously fill the customer's order first,
right.
But sometimes they'd go in there when markets were slow and when customer business wasn't taking priority, and they take a small speculative position. I never saw anybody who really put a lot on the line. I mean, your primary job was to benefit your clients and
so
leave the speculation to the.
You're down there between freshman, sophomore year in college, and seeing all this for the first time. You didn't say you had a relationship there. You didn't know anybody in the business, so I find that curious that you just kind of stumbled into this. Most people usually know somebody that introduces them. Hey, you should come down and check this out. Become a runner. You kind of fumbled into it. You end up on the floor as a runner. What did you feel like after a couple months down there in the summer? Did you want to go back to school, or did you want to stay there?
Funny you should ask. I ended up transferring to go to school at University of Illinois in Chicago, and then never went back east for school. I was just so taken by the markets and everything else. I'm like, I want to do this full time.
Okay.
Forget being a lawyer. There's gonna potentially a lot more money in this. Boy, was I was wrong, but it's also been a fun ride along the way.
Why do you say you were wrong? I mean, there's definitely money to be made.
Yeah, that's true. I mean, it's like I have to look at, would I have been better off if I'd stayed in school, gone on to law school, and gone into law, and realized my dreams of being like what's his name, Denny Crane on Boston Legal.
Right.
But in the meantime, I think that there was a lot of opportunity to be made in the markets too. And I'd looked around the pit and I'd see guys who were 4 or 5 years older than me doing ridiculously well. I mean, later you find out that some of these guys did know somebody, or they were staked by their families. You'd look at the badges in the pits, and you'd see 3 or 4 generations with the same last name trading in there.
Right.
And obviously, as time has gone by, and one of the things that I certainly appreciate about this about the marketplace now is you've sort of taken the ability to trade and have that market access away from just the old money, the old boys club, and made it more accessible for all.
Well, again, I think we need to have there's been, Wall Street 2 is just a terrible movie. Wall Street 1 was great.
Yes, it was. My favorite movie, actually. The
Floored movie, the documentaries that have come out, some of the movies that have come out over the last couple of years have been fantastic. But we need a good docu-comedy, comedy drama type thing, that would showcase kind of that transition from, because I think Trading Places is probably my favorite trading movie.
It is. It's
probably the most realistic, and that took place in the late 80s, really the same time as Wall Street. But the interesting thing about that, in that movie, they touch on it, right? You got Mortimer and Duke talking about, basically the old money, and they're having this bet. It's the turtle trader bet.
That's exactly what it was. It's based on the turtles.
Right. For $1, the Richard Dennis, I'll come in and teach, Eddie Murphy to trade, just as I can with anybody. One guy says I can do it, the other guy says I can't. So we need that movie, though, Mike. So why don't you work on that? Why don't
a modern, if they could update Wall Street 25 years later, why couldn't they do the same thing with Trading Places? Maybe. Yeah,
but I'd love to see the upstairs version of it. And the reason why I bring this up is because I want to hear, you spent a summer down there, you decided to stay at UIC. Mm-hmm. Did you keep working down on the floor while you were going to school?
Yeah, I did. It was, and the beauty of it was that it was campus just west of downtown, so I was going to school full time and working full time. I was working on the trading floor, and by then I'd gone from just being a runner to I was actually a broker's assistant working in the pit.
Right.
Instead of having 30 brokers swearing at me, throwing stuff at me all day long, it was just one. Right. But it was enough. He gave me the freedom to work during the day and actually do fairly well living wise, then go to school at night and still find a little time to get in trouble in between. So
talk about that. How long did you spend down on the floor then while you were going to school the whole time? Or
all time. I was on the floor. I was done with school in '97. I was on the floor until 2000 is when I went and then made the migration upstairs to I started doing electronic execution for a Japanese bank. I'm actually a company that's founded by Leo Melamed, who's sort of one of the great minds of the futures industry. And just to have the opportunity to work for Leo, as temperamental as he was, and learn from somebody who I wouldn't be surprised if he someday wins a Nobel Prize in economics.
Yeah, I've got a friend here in Bend that actually just came back he's heading back to Chicago right now to do some work for him. So it's always the case.
Yeah, Leo's 80 years old and still going strong, and he'll have to carry him out of the Merc out of his office at the CME building.
Right.
But he's really he's done a lot for the business, and he did a lot for me personally. As a young, to whatever degree he could in between his duties, to take a younger guy under his wings and teach him a few things about the markets and give me the chance to work. I worked with a very senior sales team on some option trade modeling, some future strips, some pretty complex strip hedges in the Eurodollars, and then a fair amount of energy and equity index execution. And the chance to do that for a large bank really got me interested in both being able to handle it on the floor, but then also and call those orders on the floor and slice them up on the floor from upstairs, but also the ability to execute those orders myself on the old Globex terminals, and get a feel for how the electronic markets worked and how to sort of interplay with those, which was then just starting to be an emerging marketplace that's now the dominant form of trading.
So at this point, I don't want to make any assumptions, but it sounds to me like your career had been learning a lot, probably fundamental about the business. You're working for these guys, these banks, these different hedging firms, these different traders, and again helping them with their executions and their models. But you're not trading yourself at this point. You're not
right.
You're not the idea guy. And again, I don't want to make this assumption, but this is
exactly. No, that's correct.
I'm reading between the lines. So, were you working to try to get to a point?
That's exactly what I was doing. I was trying to. One of the trading firms that I clerked for on the floor, I left them to actually pursue an opportunity with another trading group on the floor that failed miserably, and that's when I went upstairs. But after I actually worked for Leo's firm twice. I got laid off from there, went back to the floor and had a crack at trading full time on the floor in the pit and was absolutely atrocious at it. So that was about a 6-month experiment.
What year? Give me a time frame year wise. I always like
this was a
think about the markets.
Yeah. So you were sort of post-dot-com bubble. Treasury market starting to rally. I was trading in the 10-year options. It was and I was still really young at that point. I was 25.
Yeah.
And I think I was so caught up in the fact that, holy crap, look at me, I'm trading on the floor of the exchange, that I forgot that I wasn't down there to party and to make funny jokes in the pit and tap people on the shoulder and throw paper around. I was down there to make money, and I lost sight of that in a hurry and ended up blowing out pretty spectacularly. So.
Yeah, so that's interesting because it is a very fraternal organization, very male dominated, and as you said, if you're still in that young kind of carefree ego kind of phase, it can be, hey, it's a big fraternity. This is fun out here. I'm coming down here. This doesn't really work. But
exactly.
But there had to be a point. So was it your money on the line when you?
No, I had backers. So,
okay,
the only thing worse than losing your own money is losing somebody else's.
So tell us about that experience. You have a backer. What is a backer, and what did that mean to you, Mike?
What a backer does essentially is in my case it was a gentleman who'd put capital up for a number of traders over the years, and sort of looked for young, aggressive guys who he thought could trade his option strategy, and in return you would get he'd open a trading account for you. You would operate as your own little business. You had that trading account was your bank account. That was your money, your budget, your money that was in play in the marketplace. But you had expenses. You had a seat lease to pay for. You had to rent a booth on the floor to keep your computer, to run your Delta sheets and those sorts of things. And I was paying my lease, paying my booth rates and everything else, and barely covering that. And when I was trading, I would make some good trades, but a lot of bad ones. I'd get. When you get caught up in the heat of the moment, particularly when you're not doing well, you tend to, you know this for sure, Matt, is that you see a lot of people who tend to overtrade or who tend to trade outside their systems or outside their models. And the market's usually right And the model and the trend is usually right, and your mind is usually wrong. The worst thing you can do is think against what you're supposed to be doing. When you do that, regardless of how much sense it makes to you, it can really cause you a lot of trouble in a hurry. And that's sort of the trap that I fell into.
Trading what you see and not what you think is the hardest thing, and probably the most perverse thing in this business. Right. Today, I always like to stamp these things. It's the 21st of December. This is what I always call the silly season. This is when traders, like the guys you were working for, leave. They don't even want to be around because it's like I always say, it's like playing, at the $10 blackjack table and at the Mirage at 4 a.m. with the guys from Topeka who have been out at the strip bar. It's just not
exactly.
They're not going to play by the rules, so why play? So
right.
Again, you had this backer. Did he sit down and really tell you, hey, here's my strategy? Did he lay it out for you?
He did. He told you, and then you had several. And I clerked for him for a while before I got the chance to trade for him. So when you're a clerk, you're watching how the traders trade and watching how they interact with the pit brokers, how they interact to market changes. Obviously a 1 or 2 tick move in the market, how they adjust their strategy accordingly versus on Unemployment Friday when you had a 1 to 2 point move in the Treasury market, and you learned how to widen your markets, how to narrow them, how to try to avoid getting picked off by the brokers.
Yeah.
And the whole strategy that surrounded that, and the whole psychology that surrounded that being a pit trader. So you learned that as far as putting things into practice. Obviously, you also had a lot of option theory you were taught in terms. You had the Shelley Natenberg book just drilled into your head on option volatility and pricing, and
so
it really sort of
to me it's a fascinating way to get thrown into it, because pit trading again is far more different. And I'm curious, the gentlemen or the people you were working for, the women, men, were they primarily surfers, as I call them? They were riding trends up or down.
Yeah, it was. Well, I don't know if you know a ton about options trading, but if anybody in the audience does that's going to be watching this, we were entirely skew based. Yeah. You were just looking for bumps in the skew curve and trying to collect premium on those bumps and then buy it back cheaper. Right. That was
you were selling puts, calls on
exactly.
Treasury options, just to dumb it down for people, and trying to bring it back to the to the median, if you will. Trying to sell.
Right. Yeah, and in the Treasuries, obviously, much kind of like with equities, the panics to the downside. So the puts were really where the plays were.
So great strategies, right? If you know what you're doing, I always tell people this is the way that pros trade on the floor. Trading options, you're a seller. If you're active in options, you are a seller. Which people go, oh, that's scary. Well, because it is scary because it's unlimited risk.
Taking options, right?
Yeah. However, that is the way to pick up pennies in the corner, so to speak, if you do it the right way. So you said you had a massive flame out. Give us a story. How did it happen?
I got caught on the wrong side of things, heading into unemployment, and I had a somewhat small position on. And as the number came out, we didn't really get much movement, so I figured that we just catch some nice decay heading into the weekend. These positions that I was short I just assumed they just rot away, and I had all these positions. We were fairly close to expiry, 2 weeks from expiration. It was a short expiration month too, so I felt like I'd really have the chance to. I had a position that was nice and square, and then we didn't move on the unemployment number itself. But as the day went on, you started getting a little volatility coming in. I can't remember what exactly the news was that blew me out, but it was pretty big swing in the old account, and I sort of knew that I hadn't done well. I figured that what they'd probably do is have one of the master traders liquidate my account and have me stand on the sidelines and try again, but they let me go the next week, and I wasn't too surprised.
Right.
So, but I was young enough and technologically skilled enough where I knew I'd be able to find something else quick enough. I wasn't
so did
close to destitute, but not quite.
So you're down on the floor for that situation. Did you end up back upstairs after that? Again, the transition time, as you said, early 01, early 02 is starting to be mostly electronic anyway. So.
Right. So I went to work for a brokerage in their technology support group, literally just handling frontline support for their new electronic trading system.
Okay.
And that's kind of how my technology career started, was on the front lines handling support. I did some consulting work for a prop firm, building out their network, helping them with the design, the user experience for their application based on what I learned with the broker.
Right.
Based on what I learned from that broker. Did a couple other technology support related gigs, and then later on moved more into a product education and sales type role, which is what I do now.
Okay, so again, fascinating background, because I kind of, I wasn't in the financial sales, so to speak, but I always had a passion over markets. I sold surgical devices for a decade plus, managed salespeople, and then it came back into the markets about 17, 18 years ago. So we have similar personalities in that we like that people relationship, and
right.
So I've got to ask you, trading on the floor is very people based. Obviously, you see the same guys every day. You're basically going into that pit with those same guys who are trading, and again, you get people coming and going. So there's always that dynamic.
Right. A lot more going than coming. That was for sure.
Yeah, exactly. More leaving than coming in.
Exactly.
So, coming upstairs and then selling to yourself as who used to be a trader down on the floor. What was that experience like? Talk about that transition. Was that more fitting for your personality, do you think?
I think so. I think I still, you're still around traders. You're still, you hear, I think it's very easy to relate to them, to their wants, to their needs, and to their frustrations. And let's face it, financial technology, be it the firm I work for or one of our competitors, it's always frustrating. Nothing's ever perfect. I mean, some companies do perfect better than others,
right.
But there's nobody that's truly, there's no perfect vendor out there. So what you try to do is figure out how you can make their experience as close to seamless as possible. And the number one way to do that is credentialize yourself with them and know that they've got money on the line. Even electronic traders aren't always the most savvy technology people in the world. You have to make them feel at ease with your product, at ease with what's behind that product, and at ease with the technology.
Right.
That it's going to provide. It's going to provide a beneficial experience for them ultimately. So I think that and be it. God, sorry.
No, I'm just thinking about the technology, and as you said, floor traders are, they're definitely dinosaurs. To some regard. I mean, there's not a need for them, and then you've got these upstairs demands. Has your customer also evolved into more, everybody uses the algos, the bots, whatever you want to call it.
Yeah, you're certainly seeing, whereas 5 or 6 years ago, you would see somebody who'd be interested, the type of things they ask you is, what's your screen like? Is it fast?
Right.
Now the questions you ask are more, can I incorporate my own algorithmic strategies into it? Can I just connect directly into the marketplace and run a black box, so to speak, using your pipes? Right. What do you do about risk management pre and post trade? Can I view my risk in real time? Can I view risk across my whole firm in real time? I think it's kind of been fun to watch the technology change. And I think certainly, one of my big bets as far as this business goes is that the need for a vendor-based screen is going to sort of stagnate and then deteriorate. I think the need for a vendor-based architecture is really where you'll see the next 5 to 10 years go.
And what do you mean by that?
I think that in terms of the trading population, I think that you mentioned the floor traders, who I would disagree a bit. I would say that they're not entirely dinosaurs. I think that particularly in the complex options space, I think that those are still a little ways away from being on the screen. I think there's going to always be a need for a centralized market for complicated option strategies. Those sorts of things are better to have a price shouted out to a broker rather than have a quote on a screen. Yeah,
having a guy work it down on the floor, you're going to get a better price on a spread than you will on any. At least I haven't seen a platform that does spreads that well. So
there's a couple that do fairly well, but I think that when you start getting into these 4 and 8-legged monstrosities, you're really you're still best suited to a floor environment. But back to what I was saying about where I see technology going, I think that the population of traders, I don't think it's going to grow. You've got most of the migration has happened from the trading floor to upstairs. Most firms are sort of at capacity in terms of their staffing and their deployment. So in terms of their strategy deployment, and you'll probably see some growth in the algo space. A lot of that depends on what you see in the way of government regulation over the next couple of years. Mm-hmm. But what you're discovering is as these firms develop these strategies internally, they don't want, for better or for worse, they don't want to share that strategy with anybody else. So they're trying to keep as much of the development of that strategy in-house. And a large part of that means less and less of touching a screen or clicking on a screen to run a strategy, and more things that it's just becoming a more and more automated process. So what you're going to see now is these firms that build their technology internally and build their strategies internally, write these algorithms internally, but then don't have the financial resources or the wherewithal to build the architecture behind them. So what they then look for is a firm that they can pick up that strategy, drop it in front of that vendor's architecture, and run it that way, and leverage the vendor's risk management.
It's an interesting paradigm, because, as you said, they're constrained somewhat by resources, money, and yet they've got it kind of detailed in. But then to put it into play is a whole other level, and I get that. So there's got to be you guys have to have a lot of programmers on your end, I would imagine, to do that type of handoff.
Mm-hmm. And it's funny just to see sort of within the organization that I work for, the change in headcount has gone more from screen and front end based developers to architecture developers. And one area that my company has sort of been perceived in is that we don't have the best trading screen out there, but we do have the most comprehensive architecture, but not necessarily the fastest. So what we're doing now is, rather than focusing so much on more bells and whistles in the trading screen, let's focus more and more on this big architecture we've got and optimizing that, because we're seeing more and more of these people approach us. They've already got the trading piece. They just need the routing and the risk management.
Well, like any business, Mike, you've got to be, I think, more do something best versus trying to be everything for everybody.
Absolutely. And we tried for too long to be all things to all people, and that's you spread your organization too thin when you do that.
Yeah, you just can't. You overcommit, and then you end up undercommitting or under delivering when it comes to that in your business model.
And I can tell you firsthand that when you under-deliver, you hear about it, because traders talk to each other. They talk to each other in the bars. They talk to each other on the train. They talk to each other on the internet. You can develop a bad reputation quickly. So
it's fascinating trends that are going on in the marketplace, and nothing but green acres for your side of the business.
Right.
I mean, it's all positive, because you're trying to organize that chaos, so to speak, for these guys. Right. As you said, they've got the ideas in their head, or they've got them down on a program, on a user interface, but now I need to make it work within your architecture, and that's exactly that handoff. So you guys must have a lot of not only quant programmer, trader type people, but people like yourself that can kind of be that project coordinator between the trading world and the quant world.
Right, because what's funny is you mentioned quants. We don't really have it. It's sort of a detriment, I think. To be honest, it's sort of a detriment to some of these organizations like mine that don't have a lot of quantitative developers. We focus more just sheerly on coding, and not necessarily on coding algorithms or models, but just coding a low latency solution to plug those algorithms models into. You look at one of our competitors, a firm that I actually worked for before, was primarily focused on options market making. So they had a very heavy quantitative base. They had a team of 5 or 6 literal rocket scientist types who were developing different offshoots of derivative option pricing models. Right. And we don't have that in my organization. We have more of because we're so big, we just have two giant development centers, one in Tunis and one in London, that we give them the requirements for what we need, and they hopefully code it as quick as they can. Right. And they honestly, in this, with a lot of developers in the financial space, don't really know what they're coding. They just know they need to make clean code and fast code. Yeah. But they don't really know what they're applying it to.
They don't need it.
They don't. They're almost better off not knowing. It's like, hey, no pressure, but we need this yesterday. Yeah, exactly. Yeah.
So, is your business pretty virtual? I mean, you're based in Chicago. Do you step out and do a lot of traveling now, or
Yeah, I travel. I cover all of North America. So I travel. I'm in New York a lot.
Which is New York, Chicago, a little San Francisco.
Basically, it's New York, Chicago, a little Toronto, and Montreal. Okay. Done a little bit of prospecting on the West Coast, but really not a big presence there. A little bit of business in Houston. Mm-hmm. And then I've worked. Yeah, absolutely. I've worked on a couple deals overseas. I worked on a pretty sizable deal in London this summer. Yeah, that was.
So I always like to ask this question: trade-offs. You mentioned it earlier. Should I? Did I make the right? Turn in the fork when I decided to scrap my law aspirations. Mm-hmm. And at the time, you asked yourself that. And so now I ask yourself that 10 years later, is Mike Wilkins doing what Mike wants to be doing? What have been
Absolutely.
the trade-offs in your decisions and in your career so far?
Well, I think that I love what I do. I think it's working. It's the field, the financial technology, the trading front end and trading solutions space it's a hyper competitive one. We've got 1-800-pound gorilla in the business, and the rest of us are just and I'll admit we're among the others that are trying to play catch up to them.
Right.
So it's but I enjoy the competition. I enjoy the thrill of the fight, so to speak, and trying to find out how we can improve a trading experience for our clients and how we can where the trends are going. What do people think is next in terms of trading solutions? Do I feel like I made a trade-off? Absolutely. Do I feel like part of me is glad I didn't spend 2.5 years sitting at a desk in law school taking notes, but there's also a part of me that might have enjoyed, the prestige of working at a large law firm. But I've got a lot of fun stories that I've been able to tell over the years in terms of trips taken and experiences on the floor and experiences being out with traders and everything else that I still experience a lot of to this day. And I certainly wouldn't have given that away for a career at a stuffy law firm or in a suit every day.
I know plenty of lawyers, Mike, that went the road you chose not to and left after 10 years. So it's again, just like trading, you have to kind of be in the moment no matter what you're doing, I think, and it sounds like you've done that and achieved that. I've got to ask you a couple more questions. Family,
Sure.
you mentioned earlier, but before we came on here, you've got at least one child.
Yeah, I've got a 3-year-old. So
awesome.
A lot of fun. It was funny. My wife and I, when we got married, we were kind of like, if we have kids, we do. If we don't, we don't. But it's been a lot of fun and very rewarding. And as trying as the patience can be, I think the rewards certainly outweigh the relatively minor annoyances.
How does a 3-year-old compare to some of the traders you ran into on the?
Oh, they're about the same. The maturity. Sometimes I feel like it's easier to talk to my 3-year-old. I also like to think that because I had so much experience talking to traders and trying to calm them down, that I could be rational with him with my son too. So
yeah. So what do you think makes what makes a successful floor trader, and are those the same attributes for an upstairs success that you've seen?
Well, I think that, a successful floor trader, a lot of it was physical. It was very much, how loud you were, how big you were, how aggressive you were, how quickly you could run over and get in a broker's face if you needed to. And I think that barrier has been torn down with the advent of everything moving to the screen. Now I think it's more about how well you're able to bind yourself to a system, how quick your eyes and hands are, and then how willing to stick by a set of rules you are. There's so many traders out there who are so indicator-based. You can't. When you're a trader on the floor, you can trade. You trade based on your gut, and you trade based on momentum. When you're trading on the screen, you're trading a lot more based on momentum or some other indicator. But those rules are delineated right there on a chart or whatever in front of you,
right?
And you're sticking to it, and you can't second guess it.
I think having spent enough time on the floor and not traded there myself, but I think ultimately when it came down to it, there was a lot of technical traders down there on the floor. They came in with a chart, maybe not a tick chart, maybe not a high frequency chart.
A chart, a Stottlemyre or whatever.
Yeah, it was a 30-minute chart that they could figure out pretty quickly in their head. But ultimately, I think you're right. It's your strategy, whether you're upstairs or down, or upstairs or on the floor. Can you be diligent and
disciplined? Discipline is the universal of any trader.
Yes,
I think, be it upstairs, downstairs, what have you. So
yeah. So what do give us some 2011 predictions. What do you see happening in your world? In the trading space, politically, give me one or two nuggets for 2011. I always like to ask people.
Obama's shown much to the chagrin of a lot of Democrats. Obama's shown somewhat of a willingness to work with the Republicans. I think the country as a whole, we'll see a move toward the center. I think economically, you're going to see I think the dollar is going to firm up a little bit. I think as we continue to emerge from this recession, you're not going to have the government printing presses running forever.
Mm-hmm.
I think the housing market's going to stabilize. It's not going to take right back off right away. I think you'll probably see continued firmness in energy prices. I don't think you're going to see $130 a barrel oil, but I think that 90, 95 is about where kind of where we are now.
Yeah.
I think is where you're going to continue to be. I think gold's going to stay highly valued, but not ridiculously highly valued. And I think the equity markets, will finish a few percent higher. I think you'll probably see at some point Q1, Q2 next year. I think you'll see some instability in the equity markets. I mean, you'll see another correction like sort of what we saw. I think it's early to midsummer this year. You're probably seeing like that, but you're not going to see a crash. But you'll see some consolidation, so to speak.
Sure.
I think it'll be a fairly quiet year.
So, you still like to dabble and do a trade here and there?
I do. I still have I've had a futures account open one place or another for almost 14 years now.
What's your bread and butter trade?
My poison of choice is scalping the equity indices. I have a couple little indicator based systems I use in those. And then also a friend of mine, actually, an old trader friend of mine, taught me a fun little way to try to catch a short-term trend by taking the hourly closes in the equity indices between 4 and 10 in the morning, dividing those out, and then seeing what the first print at 10 o'clock is. If it's higher, you buy. If it's lower, you sell. Just kind of trying to ride that trend. And I have a little bit of success with that. I'll scalp the 10-year now and then. I did really well a couple years ago when you had the big inversion in the crude market.
Right.
You had just a huge differential between the front and back months, and I had a real lot of fun trading that contango. I caught a $2.10 move in that one, and I still think it was the best trade I ever made.
Yeah.
I mean, an intraday spread to move that much was paid for a couple good ski trips.
Yeah, can't we have more things like that? Gosh, I think for me, 2011, I sure hope we get the Fed out of the market and out of printing money and getting back to moderation. As you said, moderation, middle, whatever you want to call it. We're just we have become a nation of extremes, left and right, and they're, whereas most of us, I think, are more centric.
Right. So, I mean, I consider myself, I'm socially moderate, fiscally conservative.
Exactly.
And I see and I think a lot of people feel that way. I also, I don't consider myself fiercely partisan, but I think partisanship on both sides upsets me. And if you read my Twitter feed, I get some pretty good banter going back and forth with some of my Democratic friends, but it's all in good fun.
Yeah.
But I certainly feel like that it needs to stop. But as long as it goes on, there's going to be that sniping. There's going to be that little bit of acrimony. And I think to some degree that's healthy. But I think in the end, you have to realize that you need to compromise. And I think that we've seen Congress for better or for worse. Right. We've seen the president for better or for worse.
That's why you're there to govern, not to be partisan when you're in there. So,
right. Yeah. Exactly. It's not debate team. It's government. It's a whole different story.
Right. So, one more quick question on.
Of course.
You guys are always talking about, you and Greg George and Diane are always talking about food. What are you cooking for the Christmas holiday this year?
Every year I do a coq au vin for Christmas Day, so a chicken and wine sauce.
Nice.
I actually prepare it on Christmas Eve, and then I just reheat it on Christmas Day because you really let it sit overnight in the fridge, and the flavors really meld nicely.
Is it even on the bone after that much cooking?
It pretty much falls off the bone. Yeah. It's pretty amazing. You prepare it on the bone, but it pretty much falls off.
That's awesome.
My wife is of Norwegian extraction. She's American, but she's pretty heavy. I'm mostly Italian. She's German and Norwegian, so you can't get much more opposite than that. You should see my kid with his blonde hair and blue eyes. He looks nothing like me.
Right.
But so we're going to do a Scandinavian Christmas Eve. So we're going to do Swedish meatballs.
Nice.
We're going to do boiled potatoes and a cauliflower gratin dish. So a real a white plate. And don't worry, I will make sure that's all up on Twitter. So
that's right. Well, listen, Mike, I appreciate you coming on. I want to wish you.
Hey, Matt, it was great talking to you.
Merry Christmas and a Happy New Year.
The same.
As we come into it, and keep us in the loop and follow Mike again. Mike's taught. I'm not going to put him on the spot here, but he said he's thinking about coming back into the blogosphere. So, Mike, I don't know if you want to leak it out here. Do you have a title of your new blog?
I have a couple different titles in mind. One that's kind of a play on my Twitter handle, and one that's a little bit more esoteric and has to do with me being a fan of Steely Dan. So I haven't decided which one's which yet, but I'd like to get a blog going again in 2011.
All right.
So stay tuned.
All right. Thanks, Mike. Appreciate your time.
Thanks, Matt. Appreciate it.